recording in Bishan Park again. Just after a McDonald's meal. Top of mind for many this year is inflation and lower stock market returns. That's why I've got Boon Tee back in the channel today. Yes. Every 6 months we do this. We try to find out what's going on in our investing portfolio. We are in various different worlds. So it's good to have you back. Thanks, Daren. How are you doing?
All good. Busy.
Hopefully good kind of busy.
Yes.
He's been busy with a new podcast called Backholder Pod. You'll find a link down in the video description. It's really 4 people in the podcast. Tell us a little bit more about it.
Yeah. We will catch up every week. So let's say if we don't get any guests, just 4 of us together with Calvin Learn Investing, Eric and Chicken. And then let's say if we can get guests, right? So we will do more in-depth interview and so on. But just talking about markets on a weekly basis, that's enough to talk about, right? Yeah. And that's our passion and interest.
So that is a big development for Boon Tee. So today we're going to talk about Boon Tee's 2023 investing portfolio and what is learned along the way and what decisions he is making. Click subscribe to stay updated to more videos on investing. What's your investing portfolio this year?
Actually, since our last catch up, the investment portfolio, I would say it looks about the same because, okay, I'm not that young anymore. So when people get old, right, the thinking, you get a bit more stubborn with the stuff that we believe in. So I would say that it looks almost the same. And you can watch the past video just to look at the pie chart of the allocation and so on. But it's not that different compared to back then. Yeah.
Can you give us a breakdown for those who are meeting you for the first time? What are, say, your top 5 holdings now?
Okay. In my top holding, I would say actually quite similar to the ETF QQQ. So, companies like Microsoft, Apple, TSMC, Nvidia, Tesla, these are my top holdings.
Still a Tesla investor?
Yes.
What percentage of your total holdings are Tesla?
It fluctuates, but it's about like 7 to 8%.
Yeah. Okay, single digits, high single digits.
Yeah. I don't have a concentrated portfolio. I think for those who watched the interview before, I think the largest one is like, I don't know, 12%. So I don't run a very concentrated. I think less stressful that way for me. Yeah.
Let's talk about that. What are the reasons for keeping a portfolio similar this year?
I don't have like an intention to change my strategy. So for example, after I invested, I monitor their development, the business. So I would say in the past 6 months or 1 year, there's no strong reason to say, okay, this company, I changed my mind. For example, like I give up on them, hence their allocation become a lot smaller, or suddenly I have like grow my conviction to any specific companies. So that's why the view has been about the same. So for example, we talk about like inflation and I mean, some people even talk about recessions, right? So all this doesn't affect 1 or 2 companies. It affects almost all the companies on my portfolio. So I would say that's why, I mean, the allocation has been the same.
No major shifts in your overall view.
Yeah.
Let's deep dive into individual companies. Are there any specific companies where your conviction has went up? And are there any where your conviction has went down?
Okay, if we just look at the macro, okay, I would say that actually most of them actually went down in the past 1 year. And we can see that from...
When you say went down, you're talking about what? The stock price business, or your conviction?
I would say the business now, because... Okay, rewind back a bit. I think, let's say we go back to 2 years ago.
Yeah.
You can see that, okay, every time there's earnings that come out, so we keep on celebrating good news, right? So growth has been good, earnings increasing and so on. But comes to 2023, actually started maybe second half of last year, you can see that the macroeconomic situation has changed, partly because of the interest rate is higher and so on. So now we can see that there's some drop in growth, but this is not something that surprised us because although there's some changes, but the change came in like gradually. Like since end of last year, we can see that, okay, growth has been slowing down. I mean, the companies that I monitor a lot, say for example, like Apple, they just released the news that, okay, their Mac sales has been going down.
Down 42%, I believe.
Yeah. So it's not just Apple. This one affects like another companies. My favorite company is TSMC. Their numbers also aren't that good.
Okay.
But the good thing is that when it comes to these results, right? First, they are reporting their result for Q1.
Yeah.
But they actually roughly know what is going to happen in Q2, Q3 based on their orders and based on their inventory.
Correct.
And we are seeing that some recovery is in the process, but the exact timing is very hard to tell.
This is a macro discussion, but Warren Buffett says invest in companies with strong fundamentals, regardless of the macro conditions. Because, as you said, you can't predict the Vietnam War, 9/11, a million and one things that could happen. We don't know next year, could there be another war in the world as well? All we can do is focus on companies we truly believe in. So if we look at it that way, like, are there any one or two companies fundamentals where it really shift for you this year?
No, I can't think of any. For example, business, their revenue, their growth can change from time to time.
Yeah.
But what is more sticky is like, what's the quality of the management?
Yeah.
Are they doing what they say they will do?
Yeah.
So when they are making tough decisions and those decisions are aligned with their philosophy, their management, and you have how to say, like, have some resonance and you agree, align with their thinking, and even the results can be bad in 1 or 2 quarters. It's not a big deal. I don't pay too much attention. To me, it's more like just monitor the performance and just to follow their performance. Isn't that much about like, okay, I want to guess the direction. I want to guess next quarter are they going to grow again, so that I want to make a quick returns. That's not my intentions. My intention is really to find out companies that we have strong conviction in and just hold them for like years now.
Yeah. Let's deep dive to one of his portfolio companies, Tesla, naturally.
Yeah, sure.
Recently, in a Q1 earnings, the margins have went down for Tesla.
Yep.
Do you see this as a good thing, bad thing? How do you view this?
Actually, they explain quite...
Guest star, green parrot. There, the uncle with the parrot.
Oh.
He's saying hello. He wants to be a YouTuber too. It's like, let me tell you about Tesla.
I disagree.
Well, that's a very
interesting,
very friendly bird.
When I listening to the the earnings call, I try to understand what are they doing there.
Yeah.
So to me, I'm not that concerned because the situation that they are facing now is that, okay, there's some slower growth in terms of the orders.
Yeah.
So the problem is they have production that is higher than the current demand and current price. So what they do is just like be more reactive and be more flexible in terms of their pricing. So they can price it lower and then to increase the sales when the inventory getting lower, and then they can increase back. So they just move along with the market. Everything is come back to like supply and demand at the point. But in terms of their quality, like long-term things, right, which is like their R&D, the development of full self-driving, all those things is like they are moving up, like improving, but it's not like you see a huge jump just over like 1 quarter. It's not like that. It's like slow improvement. So that's the part that we can rely on. But in terms of their pricing and margin, I would say that these are all really based on the demand at, during current period. So it can change over time. But if you just think of like, oh, okay, I have some insights on this and I want to take advantage, I think it will be very, very hard because it's very hard to model whether people are going to buy more cars over the next 1 or 2 quarters. I think it's very, very hard. Yeah.
But Tesla Bull said Tesla can, because unlike other car companies which sells through dealers, Tesla gets real-time data on orders.
Yeah.
All orders are made on Tesla.com.
Yep.
So uniquely, they have the data. That's what the bulls say lah.
Yeah.
So they also, I'll just share a little bit more of the bull argument, then you add your view, right?
Yeah.
They also say commodity prices are going down. And even though they already went down by 20 to 40%, they're still higher than 2018 levels. Some commodities are still 50 to 80% higher than 2018 levels, which means some bulls feel that there's still lots of headroom for Tesla to bring prices down. And with growing sales, it's like economies of scale, right? When commodity prices go lower, the person who sells the most reaps the most benefit. And they also say, oh, even if they sell the car at break even, the key thing is it's like a Trojan horse. One day when FSD or other software features come in or App Store come in, they can make back the money again. That's the bull argument. What's your view?
All those are true, Daren. I think this talking about they're selling through their own website, right? They're doing that, right? So I think that one is really they're leveraging on their strength because they have the real-time data and other companies don't have the data. So they can't do this kind of like very flexible pricing. So I think that's the good part, like all the bull case, right? I'm totally agree with all the bull case there. The only things that I would say I want to see more is that actually if you look at the prices, I still think that the prices are still too high. Not just Singapore, like if you compare their prices, right? I want them to be even like cheaper compared to Toyota, say for example, right? So I think there's still economy of scale that is in the working. But it's still long way to go for them to like increase their skills even more, like hit the 10 million sales and so on. So that's their goal.
Yeah.
And I think they are achieving it. It's just that all this doesn't happen like within 1 year, right? It will take years. So we just need to patience and see how they carry out their plans. Yeah.
2 ads to close this loop on Tesla. One on pricing. In markets like US, they've already achieved price parity with Honda and Toyota. You look at similar prices. Of course, in the US, you got the benefit of the EV tax credit.
Yeah.
Not just the federal 7.5K, but some states add another 4 to 5K as well. So Tesla's upfront cost to a comparable Toyota. So let's say like a Camry, not a Vios, to a Toyota comparable car, is already same or lower. The second ad there is, I forgot my point. No, my second ad there is, you're probably curious about my own points of view on all of this as well. Watch Boon Tee's video with me. He's making another one with me as well, where I'll share a little bit more about his points, my points. So the focus of today's video is to hear from Boon Tee. So that's Tesla. The other company you have in your portfolio is Microsoft, yes?
Yeah.
Now Microsoft has invested heavily in OpenAI and ChatGPT.
Yep.
That has shifted the game when it comes to... A year ago, when you say I'm using Bing, people were like, whoa, okay.
What's wrong?
Okay, block. And now like, oh, tell me more. Yeah. So, as an investor, how much has that development in AI shifted your conviction?
Wow, I would say quite interesting, like given that if you go back to 2 years ago and you ask like which are the companies that you think is most innovative, I would say Microsoft maybe can't even squeeze into the top 3. Okay, top 10 definitely, but not top 3. People will always talk about like, you know, like Google's or Nvidia and so on, Tesla, but definitely not Microsoft. But it seems that they are on the right path. But how to say, I'm bullish on Microsoft, not really because of ChatGPT, because I already invested like way before all this ChatGPT happening. I think they are very strong when it comes to leveraging whatever new text that is available and also pair up with basically their sales. Imagine they are selling this mainly to the companies who are using Windows and Microsoft Office. Now all these Microsoft Office products, right, just have a like huge upgrade because of the AI that can help people become more productive.
That's right. Clippy, if you remember Clippy from the 90s. Wow, improvement.
Yes. So I think that's where I think in terms of the value that they're able to provide is like way higher.
Yeah.
They are able to charge more. So I think they are on the right path.
It can only help. Yeah. I think as an outsider, I don't invest in Microsoft, but it can only help.
Yeah.
How are you using your money this year? So example, like are you spending 30% of your money on stocks, 30% on bonds, 30% on cash? Tell us more.
For me, it's still the same. I keep my cash like relatively low because there's no near-term obligations, short-term things. I don't have that much. So cash I keep it low and just do my normal DCA.
Tell us a bit more, like, so how much of your total cash are you spending on dollar cost averaging? Are you doing anything else with your money?
Yeah, nothing much. It's just really, I have cash, I just DCA, buy stocks, buy the companies, buy ETF. It's just like continuous investing. Nothing unusual.
So all your spare cash goes into US stocks?
I would say mostly because I haven't been investing in Chinese stocks for quite a while now.
Yeah.
Partly it's because of the valuation of like US companies have came down quite a lot since I started investing. So I think it's a good time for me to accumulate.
Okay. So mostly US stocks, not just individual stocks, but ETFs as well. So a basket of stocks. Let us know down in the comments, how are you using your cash this year? This year, do you feel that you are closer to or further away from your financial freedom goals?
Actually, I don't think about this a lot. The reason is because I know that given how much I spend and how I plan my financial, as long as I'm staying healthy, right? I don't see like a big problem with financial freedom. That's not a concern because my burn rate is relatively like low. But I'm spending more time to, spending more time to think of the stuff outside of finance. Like how to learn more, how to make myself more efficient, more productive. Those kind of things. It's not so much about like financial freedom. To me, if I'm able to work for another 10 to 20 years, and I will, because I think that's how, that's how I get the fulfillment as well.
About burn rate, all these people behind us, they are really high burn rate, right?
Yeah.
Even the pets also not spared.
Yeah.
Yeah, so
So yeah, that's why I would say because let's say I will work for another 10 to 20 years, I don't think financial freedom is something that's a challenging thing. So, yeah.
so Boon Tee is a low cost, so everyone's contact is different.
Yeah.
But for us, we are not renting a place, we own our homes.
Yeah.
Our kids are in local school.
Yeah.
So the cost of living is relatively well managed, yeah. We're fortunate enough to do that.
Yeah.
So Boon, you talk about learning. With Backholder Pod, how have you grown as an investor after 6 months doing this?
Yeah, I think that's good. 6 months. Yeah, I think for bag holders, the good thing is we are able to get guesses like some
Great guests like Adam
great
Koo.
guests. Yes. So I think, people like this is like with my small channel, sometimes if I reach out people's I don't think I'm able to get guesses like this. But because of the Backholder Pods and because of our viewers, thanks to all those who support our channel. So yeah, so we are able to get them, and I mean, just seek for their view, get some good advices from them, and share it to the world, right? So I think that's the good part. Yeah, and guesses aside, just among like four of us, right? I would say the most interesting about this podcast is that even you see we are all quite polite, talking with each other, laughing. But actually, behind the scenes, actually we have very different opinions, and sometimes we debated quite a lot. And after we debate, sometimes can get very tense, but we still come back and laugh as a friend. So I think I enjoy that a lot lah. Yeah.
Nice. It's good to have peers to have a conversation with.
Yeah.
And especially people who don't agree with you, but you respect each other's views. What else are you doing personally to grow as an investor?
For me, I would say just read as much as I can. Work is busy and so on, but still have to squeeze up time to do some reading. Different kinds of readings are like books, earnings call transcripts, kind of things. I really enjoy that. Just to read and try to understand what people are doing, and so we get like the first hand information on what's going on, and not just reading like news article which people summarize for us, right? So they lose quite a amount of details that's missing when it got translated by someone else, because they are essentially opinions, right? So I really enjoy all these first readings. Yeah.
You have one book to recommend to us?
Yeah, Chip War. That's the one that I'm enjoying, because I've been investing in companies like TSMC, Microsoft. These are the companies that either in the manufacturing of the chip or design of the chip. So I thought I know a little bit. Yeah. But when I read the books, right, which talk about like since the beginning of the chip industry, where they supply the chip for defense sector and so on, I think that there's a lot of historical context that I wasn't aware of, which I think very interesting. The stories in there is very, very interesting. If you follow me on my Twitter, I share sometimes excerpts, some like pieces of information. So those are the part that I feel like very, very interesting and feel the need to share. Yeah.
You'll find Boon Tee's Twitter link in the video description as well.
Yeah.
It's got great stories to share there. The best time to invest was 10 years ago. The second best time is now. Does this saying still hold true this year?
It's always true. It's always true. Because think about it, right? The world is always feels like dangerous to invest.
That's right.
Because we have so many bad news here and there. Talk about like geopolitical news. Talk about companies, recession, non-stop, right?
Yeah.
But even if the situation is very challenging, but still is a good time. The reason is because when people fear, they will discount it. Say for example, the companies that will face some difficulties, people will discount it further and make it become even cheaper. And when you buy, you're still able to capture the premium. This is what we call the equity risk premium. If you talk about the index as a whole, but when you look at individual companies, it's even worse. There's so many parts even for big companies like Tesla, right? So I think we need all those fear to be around so that they keep the prices down, so that we can earn the premiums. The only times that I think we need to be careful is when everyone thought that, okay, there's no risk, everything is good. So there's only upside, no downside. When everyone agree on such a view, right, then that's when we need to be careful. So we always need to invert our thinking when it comes to investing. But come back to that statement, yes, that is always right, because anytime you just monitor, people are always fearful. Yeah, it's just that they change over time. It's just that there's always, people can point out risks that's here and there. There's long list of fears, like that stuff that can create fears. Yeah.
So as Mikey says, just do it. Boon Tee, thank you so much for sharing your views with us.
Thanks.
Thanks for it. If you found this video useful, please click the like button. I'll be on Boon Tee's channel next to share my views on what's going on with Tesla, AI, and also just being a creator. Click subscribe and stay updated to more videos on investing.